People often talk about my best investment ever, GameStop. How I bought GameStop in 2019 when it was $40, $2 a share. But what people don't talk about is how I sold GameStop at over $400 a share. I sold GameStop, most of my GameStop shares, on the day that it peaked. So how was I able to know that I should sell GameStop at this price? It is actually easier to buy a stock than to sell it. I bought GameStop in 2019 because I saw it was undervalued, and then I saw the short squeeze coming. I bought even more. But how did I know back on that day? It was in the end of January that I had to sell everything on that day. Because some people disagreed with me, seeing me selling GameStop. They were telling that it would keep going higher, it would go to $10,000 a share. But I didn't listen to these people and I sold GameStop. And I made the right choice because you look at GameStop today, it never reached that peak again. So if I had held GameStop, my profits would have been less. So how did I know when to sell GameStop? And it's not just about GameStop. And I'm not going to say that I know exactly when to sell a stock or not to sell a stock, because I made mistake this year. For example, DouYu, I should have sold when I was making huge profits on the company, but I did not. So today I'm going to tell you when exactly should you sell a stock. It is a very difficult question, like I told you. It is easier to buy than to sell. Before we talk about this, please make sure to smash the like button for the YouTube algorithm. If you're new to the channel, my name is Ishfaaq. I am an elite popular investor on eToro with over $2 million in assets under management. So please subscribe and hit the notification bell so that you don't miss the coming videos. Before you know why to sell a stock, you need to know why you bought it. If you don't know why you bought, how would you know if you have to sell or not? And I recommend keeping an investment diary. This is something I have. If you're a subscriber to my investment research partnership, you can have access to my investment diary. Let's talk about why should you invest in a stock. Maybe it is undervalued. This is the main reason why someone should invest in a stock. Then, maybe when it gets overvalued, you should take your profits, you should sell. This is the main reason why I invest in stocks. But other people invest for other reasons. For example, if they are a momentum investor, they just want to invest because of the momentum. So this is their reason to buy. So when the momentum is over, then you have to sell. So it depends on the type of investor you are. But for me as a long-term value fundamental investor, I would say that it's mostly about whether the stock is undervalued or not. This is the main reason why I'm going to buy a stock. There are other types of stocks. For example, if I'm doing an arbitrage deal, then maybe I can invest in a company even though it is slightly overvalued. This is something I have done in the past. For example, recently with Kansas City Southern. I already sold my shares of Kansas City Southern because I already maximized my profits. I sold on the eve that the deal was going to go through. So I already made the maximum profit. There is no reason for me to hold, and I don't want to hold shares of Canadian Pacific. Maybe you have invested in a company because of a certain catalyst, and now the catalyst is over. Maybe then this is a good reason once again to sell. Let's discuss first about selling a stock because it becomes overvalued. So you calculate the intrinsic value of a company, you take a margin of safety, it is cheap. And according to Benjamin Graham, this is what will happen eventually. The market will realize its mistake, Mr. Market will realize his mistake, and then the stock price would go up again. But Mr. Market is not someone who knows very well how to calculate the intrinsic value of companies. So what will Mr. Market do? He will put a premium on the stock. Initially, there was a discount on the stock, so there was the intrinsic value, but the price of the stock was lower than the intrinsic value. But now that the Mr. Market likes the stock, there is going to be a premium. Most of the time, there is a premium. So you buy when there is the discount, and then you sell when there is the premium. So it's up to you. How much premium do you want to sell? You may tell me that as soon as it reaches the intrinsic value, you should take profits. This is something you can do, but I would not recommend doing this, especially in such environments we are living today. There is that notion in economics. If you are holding a stock, it means you want to buy it today. Otherwise, it makes no sense to hold. I disagree with that, and even Charlie Munger recently disagreed with that. You can hold a stock even if you don't want to buy it. There is nothing wrong with it. So if a stock reaches its intrinsic value, the premium is 0%, maybe you should consider selling. But this is not what I recommend. I would recommend always a higher premium, let's say 20%, because like I told you, Mr. Market, he doesn't really know how to count the intrinsic value, and when he sees the stock going up, there is always going to be the momentum. Most of the time the stock will keep going up. So it is possible that you hold a stock even, let's say, at 1.2 times its intrinsic value. So you take a 20% premium from the intrinsic value. But once it reaches that price, of course, you have to sell then. You have to sell because this is the rule that you made. And you have to make the rules when you're making the investment itself. So as soon as you start investing in the company, you have to know when you're going to take profits. Look at different scenarios, when you're going to take profits. For example, with GameStop, I looked at the multiple scenarios. What happens if the company goes private? What happens if the company goes bankrupt? What happens if we have a short squeeze? What happens if we have a long-term short squeeze, which means it takes place over several years, like it happened with RH, or a very rapid short squeeze like the one we saw. So I look at all these scenarios and know exactly when I was going to take profits. And there it was a little different because the intrinsic value of GameStop for me at the time was about $60 a share. But I was even holding at $200 a share. It was because of the short squeeze. I knew people were buying. I knew a short squeeze was happening. But when it reached $400 a share and I saw all the uncertainties about the market, they were closing, Robinhood and other brokers, there was so little liquidity, people could not buy the shares. So I knew I had to sell because there was so much uncertainties then. And also because I could not sleep at night. So when you're holding a company, you want to sleep well at night. If you cannot sleep, then better sell it. Also, you need to look at other stocks in your portfolio when thinking about when to buy or even when to sell a stock. Because let's say you own a bank, and now you're buying another one. The other one was a great investment. It was 5% of your portfolio initially. Now it's 15% of your portfolio, but you already have 10% in another bank. So you have 25% of your portfolio in two banks. Maybe you should consider selling one of them. You hold two banks, why? 25% of your portfolio. You need a little more diversification here because most of the time these two stocks are going to go up and down together. So then you consider selling the one which is the most expensive. There is also the idea of opportunity cost, one of the main ideas of economics. You have a stock today, you are going to sell if you have a better opportunity. This did not happen with GameStop for me, but it happened, for example, with Apple a few years ago. I was holding Apple, it was 20% of my portfolio, and it was getting overvalued, yes, but I did not realize then that the market will keep valuing Apple at such a high. Let's just look at the PE ratio. When I was buying, it was below 15, now it's over 30. But I did not know that it would go above 30. But I look at the opportunity cost. Should I keep holding Apple or invest in a company which is related to Apple, which will give me exposure to 5G? But it is undervalued, and that company was Skyworks Solutions. You may say that I did not make the right choice, but it allowed me to sleep at night, knowing that I owned Skyworks Solutions, which was not so overvalued compared to Apple. And besides, I did not want to hold the largest company on the S&P 500. I still hold Apple today, so that's another point I want to discuss. You don't have to sell everything sometimes. Why I'm still holding 2% of my portfolio in Apple? Because they are still paying me a good dividend. And I'm happy with that. 2% is a good exposure to one of the greatest companies in the world. And I don't think I'm ever going to sell this to 2%. You may also consider selling a company if the fundamentals change. You are going to invest, you take a margin of safety, but sometimes the fundamentals are going to change. Maybe something happened, there was a pandemic, and you were holding an airline, and now you see that like Warren Buffett did with the airlines. Of course, his situation was different to us. He sold mainly because he didn't want to own airlines when the government was giving money to airlines. But you may not be in a similar situation, and I hope one day you'll be in a similar situation because that's a good problem to have. When you have too much money, this is a good problem to have. I can give you another example. Let's say you own a miner, a copper miner. Right now, I own Freeport-McMoRan. So I'm holding Freeport-McMoRan. I'm buying more of Freeport-McMoRan because I believe copper prices would go higher. But if copper prices go too high, becomes overvalued, there is an oversupply of copper in the market now, of course, then the fundamentals have changed for Freeport-McMoRan and I will have to take profits. I will have to take profits. But right now, this is not the case. So it depends. The fundamentals of a company sometimes can change. It's rare, but sometimes it can change. Sometimes the business itself will change. And sometimes maybe there is a new management and you don't agree with the new management. Then maybe you should take profits on the company. Or maybe just the company lost its competitive advantage. There is a smaller competitor which entered the market when you initially invested in the company 20 years ago. That competitor, you would not have thought that it would exist, but now it exists, and the bigger company cannot really compete anymore. This means you should consider selling the stock that you own. And maybe just because you made a mistake, even if you take a margin of safety, it is possible when you are investing in a company, you're going to make mistakes. For example, it happened with Bayer, and I was new to investing. So maybe I can be excused about this mistake. So it was in 2016. I was looking at several stocks and people were saying diversify outside America. So I look at the German stocks. People were saying Germany is the new America. So I look at German stocks and Bayer looked undervalued. But there are many things I failed to understand then. Now I understand them. They were buying Monsanto, the debt they were taking. There were so many issues with the company which I did not see at the time. I was so new to investing. But when I saw these things, I sold it, even though it was at a loss. The same thing happened with Wells Fargo, with Morgan Stanley. With Morgan Stanley, it was because of the loans. I didn't like them. But when I first started investing in the company, I did not really consider these loans. With Wells Fargo, what I did not like with the company, it's a mistake I made actually. I did not really consider the effects of those fake account scandal. I did not really consider the effects, long-term effects on the company. I realized my mistake and I sold at a loss for Morgan Stanley. Actually, I sold it at a profit, but for Wells Fargo, this is not the case. At some point, I owned many banks. I even had Goldman Sachs in my portfolio. So why did I sell Goldman Sachs? Because I wanted to focus on only one bank, JP Morgan Chase. That's why today I have only one bank in my portfolio. To summarize, I will tell you that whenever you're making an investment, make rules first. Write the rules. Why did you buy them? Why did you buy these stocks? Right. So that when you know when to sell, you know why you bought and why you have to sell. And then what rules I'm talking about, maybe you have a rule that you're going to sell when this happens. You're going to invest in a copper miner when copper prices reaches that price. You will believe that it is overvalued and you will consider selling. I'm not telling you write the rules and then you're going to sell after 10 years. This is not how it works. After 10 years, you reconsider the rule that you wrote because maybe the rule changed. You don't know what will happen in 10 days. How would you know what will happen in 10 years? So you write these rules and then you see when that event is happening, what you should do. And if really you should go on with what you already wrote, then maybe you should sell. But now if things change, maybe you should hold. And it is important to have rules in general for your portfolio. Once again, I will talk about GameStop. So why did I start selling even though it reached $60 a share and I said that it would go higher, but I was selling the shares? It's because I had this rule, no more than 40% of my portfolio in a single company. So that's why I sold GameStop even though, in my opinion, it would have gone higher. It was at $65 a share, I believe, $58 a share when I first started selling GameStop. Then I sold again at 65 and it kept going higher. The next day I sold even more. So I kept it at 40% of my portfolio for a couple of days. And then when it reached at $400 a share, $420 a share, $420.69, then I sold most of my shares of GameStop. It fell to 20 to 15%. And then I sold more shares when it was, I think, $260. So I could not take maximum profits at 400, but I sold some at $260 a share. So still it was a great investment. So of course you will not be right all the time when to sell exactly. You will not know it, but you have to maximize the probability that you're selling at the right price at the right time. Oh, I forgot something. Taxes. You have to consider taxes. You have to consider commissions. I did not talk about taxes because most of the time, for me, even long-term, short-term, the taxes are the same. That in America, it's different. If you're selling something after 1 year, you pay less in taxes compared to selling in less than a year. So this is also a very important thing to consider. So let me know in the comments what are the things you consider when you're selling a stock. Thank you for watching this video. Please like, subscribe and share. Please watch these two videos if you have missed them. Have a nice day and goodbye.